Welcome back. From the COVID-19 pandemic to record inflation, 2022 has been a roller coaster ride for markets, and as the world navigated these hurdles and more, many of its major economic players weighed in. Now, joining us to discuss some of the highlights is Avondale Asset Management founder and the Transcript editor, Scott Krisiloff. Excuse me. So, Scott, let me begin with Fed Chair Powell. Now, he had some interesting comments at last year's Jackson Hole conference, which was actually in August of this year. Let's listen to that real quick.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done.
Now, I like this one in particular because Keeping at It is actually the title of a book by Paul Volcker, who's also a hero, I would say, of Powell's. He's mentioned him at various times this year. Just wondering how your service, and maybe you can just give us a brief overview of that as well, how it fits in and your analysis of what Powell is trying to say here.
Yeah. I mean, I think as you think through the top quotes of 2022 and the real themes of 2022 as we're looking back through the year, the biggest theme for capital markets was the actions of the Federal Reserve in tightening interest rates and tightening financial conditions. And that really happened in a few stages. I think if you're thinking about the beginning of the year, we were actually still at zero. The Fed didn't raise rates in their January meeting, started to raise in March, and then started to get really aggressive in August. So if you're thinking about, again, 2022, August was really a turning point for the year when the Fed got very aggressive, and Jerome Powell sort of signaled that for the first time at Jackson Hole, the conference at Jackson Hole. So,
one might argue the financial soundbite of the year was from who else? J.P. Morgan Chase CEO Jamie Dimon at a conference in June. Let's listen.
It's a hurricane. Right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
I would be willing to bet the word hurricane has been used in every subsequent interview for Jamie Dimon since then, and he's clearly pausing, trying not to use such descriptive terminology. How influential, how much did that set the tone for the months ahead?
Yeah, I mean, I think it was really important. And I think that it's the same thing that all of us have been dealing with throughout this year as we've been following capital markets and trying to prepare for a potential hurricane. I think Jeff Bezos later in the year talked about battening down the hatches, which would be a similar sort of storm metaphor, I think. But the interesting thing, especially when you go back to Jamie Dimon saying that, is that there's two dynamics there. There's a storm that's forming on the horizon, but hasn't quite hit. And I think throughout this year, one of the themes actually, in addition to this, was just the resilience of the consumer. The consumer continued to spend despite the Fed's tightening and capital markets being soft. And it's only really been towards the end of the year that we're starting to see some of the softening happen. So a storm on the horizon, Jamie Dimon talking about it being still sunny as far as he was sitting and as far as all of us were seeing, that storm is really coming forward, not quite here yet, though.
We want to stick with big banks here and just think about the new year. Earlier this month, Wells Fargo CEO Charles Scharf says we are in the midst of a slowdown and people are spending less. Here's what he had to say.
There is a slowdown happening. There's no question about it. When you watch, CNBC and Bloomberg and read the newspapers, it can be a little bit confusing because the slowdown is across industries. When we look at our own consumer spend information and we talk to the companies that we bank, there's some that are doing quite well and there's some that are struggling more. Net, the growth is shrinking that we've seen in card, albeit there's still growth. Debit card spend is about flat, with transactions being down a little bit, offset by inflation.
So some comments about the consumer there. What are your takeaways?
Yeah, I think, again, as we were looking at the quotes of 2022, this one stood out as really important for me because it was recent. This was actually at the beginning of this month. This was Wells Fargo's CEO talking about a softening actually happening, confirming a softening. And as I mentioned with the Jamie Dimon quote, throughout the year, we had seen that bank CEOs and credit card companies, especially, who were seeing the full view of consumer spending, had not seen really much weakness coming forth. But really, in these last few weeks, Black Friday sales were only up about 3% from the year before, and then consumers may be starting to pull back. So if consumers are softening, that means that the entire economy may be starting to slow. Maybe we are getting the recession that a lot of us have been waiting for this year. And that would have implications for Federal Reserve policy and capital markets for next year. So as we're thinking about what happens in 2023, this is a nice little bookend for 2022 as kind of a ... Let's see what happens.
All right, Scott, batten down the hatches. Prepare for hurricane. Don't know how many I got left. Good to see you. Merry Christmas to you.